Great and beautiful morning, afternoon, and evening to you, wherever you are joining me at this hour. Welcome to 233 edition of Investdata Trading Academy live with Ambrose. I would say that most of the market across the globe tumbled yesterday, and this morning was in a kind of a gradual stability, despite most of them on the red and some are missed. I will tell you that the shock of what happened in US, one of the 16 most capitalized bank there has also has shaken the market across the globe, and not only the market, even our market here is not left out. We can see how investors are reacting to banking stocks, despite most of them results are not out. Yes, we have seen some of them unaudited accounts, but majority of them have not released their account for 2022 financial year ended December 31st. That means with this pullback we are seeing in local market here, I feel like this banking stock become more attractive. That means we expect to see a rebound in this banking stock when we start seeing their numbers. For those that are yet to take position, for especially for income investor, a pullback in this banking stock creates opportunity for you to buy them because most of them have shown strength in their number. I know that there's the fear of a contagious effect on what has happened in US financial market, especially the 48 hours collapse of Silicon Valley Bank. That has sent this panic across the globe. But it's expected that this same thing also are going to create opportunity for the market. This what has happened is a plus for equity market all over the world. I tell you, why I say so is that what has happened will send signal to the central banks of the world to see that the impact of what of their rate hike is started telling on the financial sector. Not only that, once you hide it, we're also putting the government of each of these economy, in a big task because they need to service the debt also because most of these governments are running on debt, especially here, you that is, I'll tell you, they run more of debt. Their government is more of debt. That whenever you are increasing, rates, it's going to hit them. Also down here, in Nigeria, we are seeing, what is happening when there was a hike, in rates here in Nigeria, and for this first one in 2023, we saw that there was a disconnection between the rate and what and the NPR. But now we're seeing the correction trying to come back again to that level. But I believe that if the central bank, the CBN said they're going to borrow more than a trillion in this market, if that is yes, the amount will also don't forget that when we are going on high cost, we're going to service it, and also the government have said that will have a deficit budget for 2023. If you want to borrow to, it's going to affect also because cost is very important. If you want to use your budget to service cost, it's also left for you. I believe that the incoming administration will sit down and look at all this. If you are borrowing, on what cost are you borrowing, and what's the part, how are you going to recoup your manage the borrowing, what are you going to recoup to pay back all this thing. It's very important to look at it as investor. But today, we're looking at what has shaped the market globally. The incident that happened, that means last week also contributed that the market, as we speak now, across the globe are missed. But if you look at what is happening in US market at this hour, we're seeing some in a kind of stability. That doesn't mean that it has rebounded, but because all eyes on what on consumer price index for the month of February today, before before the market close today, they're likely to see their own figure, and that is what because this figure will also point if the Fed will go ahead with their 50 basis point hike they planned earlier, even when the Fed chairman before the Congress, when he appeared before the committee on banking, Senate, and the House. This outcome of what happened to this bank, even when the government came in to kind of intervene and also reassure other banks of emergency they are ready to inject funds, that didn't change the trend. But it now dawned on the Fed and his team, the monetary policy, to see what they can do at this point. For that, that's why I said what has happened, in US today is recently last week is a plus for capital market. Why is it plus? They're going to send a signal to the central bank, and when you see they start kind of doing what we call rate normalizing, start rate development, that also will be a plus for capital. That's why I say what has happened. I've seen them come. You people have gone over the bar, and that is what it has result of because these companies or that put money in this bank, they are not running in the they are operating the economy where cost of borrowing is high. At the same time, people purchasing power is high because of inflation. No, and also the industry that don't have issue, the tech bank. The first of all, these are sectors that are highly depend on what research and development, and they borrow money to do that for what innovation, because innovation is what drives the tech business. For that, when rate is high, they are about to report default what in repayment, and that's why your non-performing loan will start going up. Like I said yesterday, that it's not just overnight that this thing happened. For those that are following this company, this bank when they're in US, would have seen that yes, the financial of this company, their balance sheet, their cash flow will not continue to tell you that something is is stable. He said they will give you a sign, and that's why when they came out to say they want to borrow money, like I told yesterday, they were unable. And when they start selling their assets, that sends signal for what, for massive withdrawal that that turn the bank to where it is. But it's good that the government have stepped in to save the bank, while other subsidiaries outside outside the US, some strong banks that are healthy are also trying to work to take to take advantage of it, to to acquire those banks so that they can take business and make sure that their economy where they're operating don't suffer any setback from this world collapse. For me, this is a good one, but like I said earlier, investors should not panic. They rather take advantage of it. We can see that across globe, both Asia, both Europe, both Africa, all over the world, we're seeing that these have affected what prices of stock and also investors' what psychology and sentiment. But this volatility, like I always say, it is good for the market. Like going forward, we're going to see a better what, a better intervention from the central bank of these countries, and at the same time also from those that are in charge of regulation, so that you will know exactly what is happening in the industry where we are regulating, so you can take the right decision at the right time. So at the end of the day, it becomes good for every investor to know what to do at the right time. These are the key things that we need to do every time we are in the market. That's why I said, as a trader investor, your eyes must be what on your chart. For what happened yesterday, even our local market here, we saw the reflection on the chart, and those market we saw that pull back sharply. But this morning, we are seeing that stability is coming. It is not an extension of what we saw yesterday. Tells you that normalcy will come, but might not be immediately. But as far also we're expecting more numbers from companies in that domain, and down here, I believe that all eyes will be on this on this data. And I told you that data early before now, that when data hit market and kind of analyze, digest this. Well, the way they digest it will also approve what they're going to do next, and that's why I believe that what has happened, even to Asia market, we saw everything being what turned around overnight because of what fear, and also the contagious, like I said earlier, has impacted this market. But the good thing is that monetary policy anywhere in the world is designed also to check the economy and also look at. But I believe that what has happened now, banks that are the central banks of this world are going to look back and see what they can do at this minute or at this period to make sure that the confidence of the people or that the economy is also put on track. And that's why I believe that as US government have taken a step to see that this volatile move what we saw will also reduce, because that fear of the fallout of what happened has also started coming down. And also as I see how the inflation data will also contribute to see if the rate hike in this month by Fed will still go on by 50 basis points. If not, a 25 basis points, if it comes again, that will also be a problem. And normally we'll start seeing going to start seeing a normalization. That will also send a good signal for the market. But also don't forget that also crude oil price also trying to oscillate now to speak now. Crude oil pull back below, to trade below $80. It's a plus, but what is happening in Russia and Ukraine is not coming down to speak. I see that the I know of equipment, like I said yesterday, that most of the leaders are concentrating on what, on equipping their their defense, and also try to escalate this war instead of looking at what is going to improve the economy globally. Because the more we are seeing this crisis in Ukraine, yes, many of these nations are benefiting because of their arms have been sold and all those stuff. But that should not be the aim of a leader. I think that our leaders in international world should also think that let stability come so that the economy will move. You are there to serve the people, not to kill them. So that at the end of the day, we'll start seeing recovering across the globe. That will boost confidence again. And I believe that each economy or each domain have peculiar thing that is happening there to guide them to make their investment decision. But for us here in Nigeria, all eyes on what are the next coming government, and at the same time, they are coming with different reform, because we expect to see a policy shift from this government and the operators that are going out and the one that is coming, and also reforms in different sectors, reforms and also change of economic managers. These are the things that I believe that is going to shape our market. But as we speak now, no, today is the first qualification day for the December year account, which is coming from UCAP. We're going to see more qualification days and also more markdown this week, till end of the month, and even to early April. That will shape the market. But also, don't forget that between now also the end of the month, we're to expect to see more results. And if you look at the number of companies that have released results so far, there are just about 12, and on cover about active 86 companies on the exchange. About 12 have released their results. We expect to see more from these companies. Yes, we know that some have much account July and September, but for December, we expect to see more that have released their own account. That will shape the market depending on what they pay, and also the outcome of the fixed income market. The TCP may option tomorrow will also tell us where the fund is flowing. But I believe that there should not be let's expect not that I say should, but I expect that there should not be any adjustment above what was seen about 10% for 364 days. If there's anything, that will also be that will put pressure on equity here and here. But for those that are going for dividend income, that are already also positioning in those stocks. For me, the market, remember, like I said, market are giving sign of what pullback correction already as it continues to side trend at this point. Market has not broken out to touch the 56,000 mark, but seen it on the side on a ranging side. And this ranging side tells you that market is waiting for something, either a pullback from here or what or a breakout. But from the market break we have seen so far, we are seeing that the sellers are dominating the market. Tells you that profit taking and sell-off is already ongoing. But I believe that we'll start seeing the positive earnings from the strength of what we saw on the account. That might change the face of the market. For those that are income investors, don't need to panic. But for we traders, are waiting for this pullback to happen that can reposition the market again forward ahead of Q1 number, and at the same time, no expectation to come from what from the new cabinet. After constituting the cabinet, the ministers, and also the National Assembly officials are also to elect their principal officers over there, and that also gives a clue where the economy is going. But I believe that the president-elect and his team to start to hit the ground running, knowing that where we are going as a nation to put things in right. Because I tell you, without the economy, there's no government. Without the economy, there's no politics. That means the economy has to run so that the politics angle of the system will also be sustained. Because if you're running a policy without economy, how will you sustain your work, your policy, and also your government system? You need to put your economy in shape so that it can support your government. That's why I see that all hands will be on deck. But from those that are coming in as a new government, their thinking and their team all will put their hands to make sure that things is done proper, to make sure that Nigeria also rebound for where we think that we need to move forward as a nation. I tell you, we can't separate the economy from the capital market or the stock market. Most times people said it happened, but not always, because what is happening in the economy, the market will tell you as we speak. But we have seen market for almost 3 years in the up direction. Yet it's also a pointer. Now that we're expecting we're expecting the incumbent government to be going out from May 29, and we're expecting to see incoming new one in that May and early June. That also will tell you where we are going, because the incoming government will come with strategy to make sure that Nigeria continue on the path of progress, and that if that is sustained, we expect that this suffering of experience, even from the cash crunch and all, from a post COVID-19, we need that incoming government have a lot to do to make sure that there's a kind of a change or organized private sector where things will work, and that things also look up for. But that's why investors should not be carried away. There's a lot of opportunity already, in this market now. For you to take advantage of it, you must get information, and that is why the coming master class is how you can take advantage of the expected election rally. Because hopefully by God's grace, this weekend we see that election season has come and gone. Then we're all looking at to see the outcome of the delegation or the tribunal and all those stuff. But I tell you, once we're able to get it right, or also start today, that tension of election year will also gradually start coming down. Then planning to implement policies, planning to continue, the governance will also come in, and I believe that that will go a long way to help the market. And for that, investors should look at which sector and which industry, individual stock has the capacity to create wealth for them. And that masterclass is coming on the 1st of April. That is what we're discussing. The industries we'll be looking at, the sectors and why and how to buy. Because as we speak now, I will tell that most of the market, generally is on their value. And when the market is below price earnings of below 15. And also individual stocks, you can see that most of them are having a 1.2 times earnings, price to earnings. Say that you have lesser period to time to wait to your money, and it tells you that this valuation will also be part of attraction in the market. You don't need to panic at all because we are seeing that our market is in order. Like I said earlier, quickly before I round up and go to the live market and our market here, our eyes on what on consumer price index figure in US as we speak now. That also determine if rate hike will continue as a Fed had planned earlier to earlier to read about 50 basis points, and also what happened also affected the yield in the market. We saw how the yield tumble when this thing happened after touching as high as what as high as 4.2 before now. You can see that a tumble below at this point is below 4 already. It tells you what that it means for what for the fixed income market. And if we start seeing a kind of a rate normalization going to the future, it will be a close capital market. Why this also slow down in cash flow into what into the fixed income space, and that will make the market. And don't forget that once we get it right as a nation, through this coming the incoming government are taking a shape, that will also impact on the market generally. For me, there's no cause for alarm. Let all eyes fixed on your charts, and also look at what is happening. For sentiment will always tell you where the market is heading to. And I believe that as funds continue to flow from fixed income to equity market, from some one instrument to the other, you should know where to be at the right time and what should also support where you are. Is very, very important for you as well as an investor. For me, there's no cause for alarm in the market. I told you earlier that what has happened is a plus for the market because it also it may force, like I said, it may force to for the central bank of the world to slow down the pace of rate hike, like so that they will that will start fixing some things right, so that at the end of the day, they are not the one that will usher the whole economy into recession with their policy. Like earlier, the World Bank and the IMF have been warning that we should take that they should limit or reduce their worries because if they're not taking, they will put the economy. Because in the sun already, this collapse shows that the tightened financial condition as has affected the whole thing. But I believe that the other way, this is a plus for the market. Pressure on the banking sector also will reduce because I tell you, yes, rate hike is a plus for them to make a return cost of high rate. But when the people that want to service their debt are not also able cost of high rate, it's also have a way of also hitting them. That's why it is good for the regulator to to balance all this. That at the end of the day, we can move forward. Make sure that this economy, the financial market is balanced to boost confidence, and also that is what we expect to see going into the future. If this is done, there's no cause for alarm at all for investor. Yes, back home here, I want to look at what is actually happening here in our market. Yes, we saw that the fear of what happened has kind of reflected on our market yesterday. We saw how the banking stocks fed, and this one also was seen also that hit also on the bank. But the good thing is that I'll tell you that our banks here are strong. There's no cause for alarm at all. So I say, why do I know? I say that our bank are strong. If you go and look at the balance sheet of these banks, they are robust enough, and you can see their net asset. You can see their for me, there's no cause for alarm for our bank. But let's keep our eyes on the results we're expecting. The pullback in price as a result of this fear should also create opportunity for those that are deciding to know exactly what to do at this point, so that at the end of the day, you can take advantage of this pullback in the market. For me, it's a good one. Yes, if you look at the index as we speak now, the Ocean Index is trading at around 55,700 and 700.53. Market is down by 87.34. That's about 0.18. That is almost 0.2. Market is down on this one, and this on a stronger negative market breadth. We're having a 13 losers against just 4 gainers as we speak now in the market. I think the margin of sell off in the market or profit taking it's a sign of correction. But I believe that is this year once we start seeing the earnings of this program and also the outcome of the event that's coming tomorrow, the treasury bill after the high it in there was a tick up or kind of an uptick in the the rate for last Wednesday. Another one is coming tomorrow for us to know whether that also determine whether there will be more pressure on equity or not. But I believe that that will also be a plus, depending on inflation data that will also come tomorrow being 15th also will also be a plus. For me, there's no cause for alarm. Let's keep our finger crossed. But any pullback at this point, it will also give even more strength for the market to continue the uptrend if we get to the point. Believe that for investor, take your position for dividend. For traders, you hold your cash, any profit you take now, how you hold your cash or your profit to see new opportunity after the correction or the pullback. That's why in the April 1st, in that masterclass, where all these analysts or professionals will also be telling you what to do with your fund and where to enter. That's why it's very, very important that you book that date in your calendar and make sure that you take advantage of the discount that now and make your payment so that you come and listen to all these people that has something to tell you on how to take advantage of what you expect that being post-election year we expect to see election year post election year post election, because after the election we are pushing the election and planning, but I believe that market, building your market, your position now against the 2024 by all grace, by God grace, all things being equal, we're going to see a good market. And if our God grace, this what is happening in Ukraine also stop, I think a lot of, but our economy are already looking inward to see how can I look at our sectors where companies that are doing well, the sector that are supporting the GDP, where you can also invest now. I see this potential and opportunity which will be shared at the coming event is very, very important. Yes, back to the market. Now I said we have 13 losers as we speak. The top 5 losers are the consumer warehouse group leading with almost 9.2 down, then followed by prestige assurance, that's about 7% down. You can see linkage, now UPDC, then we're also seeing Wima Bank in that category. These are the top 5 losers as we speak. But if you look at the gainers, I told you there are 4 as we speak now, and the first one there is Nigeria Enemaware. That is the first one there. You can see FGM Coco, Sterling Bank, and QTs. I'm surprised that the Enemaware is coming up at this point, even when the bonus of 342 was cancelled. After they've announced it, but you can see that position stock is still looking up. There's almost 9% up now as we speak, which is a good one for that stock. But you have to play with caution on the stock that you know that their prices don't move regularly, only once in a while. I mean, it depends on your investment objectives. But I told you earlier that the pullback in the banking stock is a plus for everyone that are not there to take advantage, depending on your investment objective. But if you look at in terms of volume, the stocks that are topping in terms of volume at this our volume trader is Champs. Champs is trading about 7.30 million shares. GT Cool trading around 25 and 7.44 million shares traded so far. UCAP also doing 14 naira 80 kobo, 14 naira 60 kobo, 60 kobo, trading about 4.5 million shares. UBA doing 8 naira 10 kobo, 4.3 million shares. You can see Access Corp at what? At 9 naira flat as we speak now, trading about 3.8 billion shares. This is the state of the market in terms of what performance. Then we will look at what is happening in terms of sentiment and chart. What is the behavior of the people in the market? That's why it's good to always stay glued to your chart. After saying all this, want to see how is the performance of the market, where is the market going, look at the different time frame to know exactly what is happening in the market. We have seen here, if you look at my cursor here, from here to here, you can see the market have been on a sideways movement. We are not confirmed a big breakout here or pullback, but at the market is trading now, other indicator will tell you that market is already setting what we call a divergent, a very divergent, that the MACD is looking down at this point. We want as market is trending, tells you that any moment from the market might give in to pressure to pull back, and if we pull back, it creates more opportunity for us to enter the lower price, and that also will add more strength for the market to surpass where it is now and move and continue the uptrend going to the future. But like I said, don't be carried away off market. If you have made profit, take your profit. For those stocks that you are still expecting their earnings, you are still there. Watch what is happening by looking at the chart of those stocks and the momentum behind those stocks to see where they are heading to. Once you know where they are heading to, it becomes a plus for you to know exactly how to act in that moment or what you are looking at. Yes, people want to call up our charts, our indicators. Sorry, chart is already displayed. Let's call our indicators. These are key indicators. Want to look at what is the momentum saying now. Want to look at call our MACD to see what MACD is saying is very, very key. What our money flow is saying. Want to look at it, and what our T-line is also saying at this point. It's very, very key that we note all this when it comes to what analyzing the market. Yes, you can see our MACD already. You can see what our T line is saying. This is the index action. You can see above the T line, but as we speak now, index action is resting on what on the T line. In a moment, but if you look at your MACD has confirmed already a bearish trend. Despite the market is trending, this tells that the market will likely go in the same way the same way with what the MACD. Also, if you look at the money flow. Money flow has slowed down at this point now. Money flow is trading is below 70, around 69. Yes, good because it's still above 50, which is good. That's why I said because all these momentum should remain positive. That is the confidence I have that anything positive can still happen at this point. And for those that are in profit, nothing stop with the profit. But for those that are in position that all eyes are still on the numbers expected, market still have potential to continue the uptrend depending on the strength of this number. But with the insight we have gotten from the Q1, the unaudited account we have gotten in January, we know companies that are likely to grow. Those that are able to grow their dividend and their earnings are looking up are what will drive the market. And that dividend is what all eyes are on now because we have seen their performance. You guys are unaudited, but we know that the difference between the audited and the unaudited might not be much. But at the end of the day, what is the payout for this? And the good news is that most of these companies has continued to notify the exchange or investor public on their board meeting date and approval of what their final their audited financials for 2022 and their corporate action in terms of dividend declaration or recommendation. This is what I think that will support the market going to the future. Yes, let's quickly look at this the day chart. So I want you to see where the market is now. You can see that even at the markets are trend here, already seeing this candlestick formation at the end of a market that is trying to side trend and at the same time an up market. You look at from month of November to where it is, it's an up market we are seeing. Seeing market in this mode from here to here, market has trend. There was no a serious breakout here. Seeing this sign here is a sign of weakness, a sign of correction that market already we are seeing it here this morning. But like I said, the market is still above the T line, resting above the T line. It has not broken down. What it broken down, confirm that yes, like I told you also, when you see that the index action or price action is above, is far from the T line, you can see that the distance between all these ones and the T line is what is there. When it goes at this level to here, like some people, like those of us also that are trader at this point, some people like say let's take profit and let's take partially. And here we're expecting that the numbers that can also push them up, which will see some stock moving up further even when at this point. For all eyes of this, but whether the market will continue to side trend or break out up, or with this candlestick formation, I will tell you that there's likely that the market was also good. And why it means that market went up as high as this during the day yesterday, but came down to close flat, almost flat, which we saw now this morning. It's a sign of weakness that sellers are in charge here, and that is what we are seeing here. These are why I say you must be in this class to understand and interpret all these candlesticks to know exactly what to do with them. And you can see that MACD is already looking down. You can see it here. And money flow, you can see it also looking down slightly. These are the things we need to consider when you are trading or investing. This for a day chart. Like I tell you, if you are looking at a day chart, look at 1 hour chart. After that, you see where the trend. On the 1 hour chart, you see that price action is slightly below the T line now. And MACD, as we speak now, is bearish, but money flow is looking up to 45 on a 1 hour chart. Quick one, you need to look at what is the 15-minute chart saying, because I told you it goes give you another good position online. It means that the market is weak already. You can see it here. From all this white, you can see the market is trading below the T line, and you can see that money, what's it called, MACD is bearish already. You can see it now looking down, and where this money flow is on a 15-minute chart. This tells you that yes, there is a mixed market sentiment on different time frame to guide you that yes, market it's not too. Whatever I say now, market momentum is strong, but I think that there's a divergence between the index action and the MACD. That's also sending a signal for a bearish divergence, which also should concern us as as trader. And that is due that when you pull back, you buy. But for those that are investor, take your position and take your dividend because you are there as buyable, and this dividend is what you need to survive And then for we that are trader, we want to see opportunity that we can buy low and sell high for capital gain. That's why our strategy is different from those that will buy and hold strategy, investors. This for the market. Yes, people want like today is the markdown for UCAP. Want to see can we still take advantage of UCAP? What's the momentum in this UCAP as we speak? It's good that we know. And the banking stock that we see that are looking down because of the fear of what happened in the US. We want to look at two of them. We want to look at Access and UBA chart for quality today. But good thing is that if you look at UCAP here, yes, this morning you can see that almost tried to break out the T line, but he tried this D chart was still red here after touching around 1480. But you can see that it's also playing around there, almost touching around 1480 this morning. But today is the qualification day. You can see that volume is still relatively high because here was here to cross the blue black line, but I think it's a good one. And MACD is telling us something about this stock, and that is why for those that are selling this time, our advice if you are there, you can take your dividend. This histogram is telling us that the stock is also coming to become very soon. Money flow as we speak is flat at 38 point, which is slightly below the 50 point, which is good. But let's keep our eyes for income investor. Go ahead and take your position for the stock. Let's look at the stock on the last 2 hours. You can see the performance. Is below the T line now, and you can see the same thing I was saying. The same MACD is also on 1 hour trying to become bullish. You can see here what we are seeing here. But the money flow is looking down to it also 34. Almost the same time, I see potential in this stock after markdown. I mean, this will guide your decision on what to do. Yes, we look at UBA before for UBA and Access before for these are another financial service company and banking sector. Want to look at UBA, you can see all this while on the 1 hour chart. UBA have been struggling for this while on the 1 hour chart. But the good thing is that there's also a sign here I can see on this chart that MACD is becoming, that's why MACD is a lag indicator. It will give you a clue. You can see, but money flow is looking down on the board. Let's look at a day chart for UBA. A day chart for UBA will tell you in the last 2 to 3 hours, you can see that it has been almost on below T line, which is not too good, and also MACD is becoming more bearish on a day, and money flow is within 45. For me, for income investor, fine, but for traders, let's wait the stock to give us a sign. We're seeing a sign of what of pullback in the stock. But for those that are income investors, this price is selling at 8 naira, 10 kobo, 8 naira is a good one for you to buy for dividend. Even when they are paying 80 kobo, that is already 10% yield. More than that will be a plus for you, and I see that happening in UBA. Last but not the least, let's quickly look at it. Access Corp. Let's look at Access Corp and see what is happening there. This will be the last for today. They will continue tomorrow. Access Corp, we are seeing that on the 1 hour chart trading below the T line. You can see the chart here. Even when it tried to come up this morning around the touching around almost 9 10 9 12 before coming down to trade around 905 now. You can see that the MACD is not looking too good. Our money flow is also not looking too good on the day chart. On the 1 hour chart, see what is happening here. The last 1 hour, you can see it was green, but we're seeing a kind of stock right to the decline here. That's why on the 1 hour chart, the red one, but you can see that volume is coming out from the stock, and we're seeing that the stock becoming bearish, trying to confirm a bearish trend, and money flow is far low on the 1 hour chart. Let's go back across for this stock. But let me look at the week chart for Access to call it today. So Access will just break down from the T line now on the weekly chart. We are seeing that the money flow is still looking down, and MACD is becoming is becoming bearish. You can see that the histogram is also coming down here. That means let's all eyes be on the result, and that might change be the game changer depending on what they pay. But from what we're hearing, if they are unable to operate some of their profit from other Africa, West Africa countries where they're operating, it might be kind of for me not be good. But if their profit share is much, we saw there was the year that Nigeria profit board that bail out that go to cement. If that should be the case for Asset this time, that would be nice. Let's go across as investor and wait to see what the market is about. Keep your eyes on your chart day in, day out, and to see the momentum in the market. That will go a long way to guide you. On this note, I say bye. Enjoy your rest of your trading day today. Bye.